Is Best Buy stock, ticker symbol BBY, a buy after its recent pullback? Because today, January 9, we detected unusual options activity to help us answer this question. And so in this video, we will analyze these unusual options to determine whether it is a good time to buy Best Buy stock. As you can see, at 153, 1,850 contracts for these 72.5 strike puts expiring February 16. We also got a second set of data here. At 11:03, we can see multiple trades happening for the March 15th for the 62.5 strike puts and the 72.5 strike puts. So can these two sets of data aligned in the same direction? Because if it does, then this strengthens our case. So let's get to the analysis of the first set of data, the February 16th. 38 days away, we can see that the 72.5 strike puts are clearly opening trades since the open interest of 415 is much less than the 1,800 unusual options. We believe that they were buying these 72.5 strike puts, and when you analyze this trade, you can see that this is clearly a bearish trade, shorting Best Buy with a negative 10 delta for each of these put options. And we can also estimate the value of the trade. It's about 129 per contract. There was about 1,800 contracts, so about $232,000. Now, how about the second set of data? This was for the March 15th. We can see here, this was also for the same strike, 72.5 strike puts, and the 62.5 strike puts. And both strikes are opening trades since the open interest is much less than the volume. And we have a volume of about 5,000 contracts. So, what were they doing? We believe there's a high probability that they were buying the 72.5 strike puts as they were for the Februaries and selling the 62.5 strike puts. And when you analyze this trade, you can see that this is also a bearish short position, a vertical put spread. And they have a estimated debit trade cost of 193 times about 5,000 contracts. So we know that this was about $965,000. So not quite breaking the $1 million threshold for it to be a higher probability of profit trade in comparison to our member-only trades. And that is why we simply just followed this trade in the same position. You can see here, position where we bought and we sold this strike, right? So for trades that are not high probability in comparison to our members-only trades, we simply follow the trades of unusual options. And typically when it is greater than 1 million and we assess other variables as well, then we can categorize it as a higher probability of profit trade, and we share those stock picks with our members only. If you are interested in these higher probability of profit trades, we'll put a link to our website at the top here so you can learn how you can gain access, so you can gain an edge based on this type of analysis where we use the unusual options activity as a strategy to pick better stocks to beat the market. So, based on these two sets of data, we believe that it is not the best time to buy Best Buy stock because there are trades that are pointing towards the bearish short side. And so this elevates the risk. And so we do not think it is a good time to buy. We prefer to buy stocks that do not have this type of risk to increase our chances of profitability. And so comment below on what you think will happen to Best Buy stock. And as usual, please smash the like button. Subscribe if you haven't. And we'll put a link to our website. You can learn more about how we use this strategy to consistently generate profitability by choosing the best stocks to trade, whether it is going to go up or down. We follow the trades of unusual options activity data because these trades are done by wealthy investors who have a lot of capital and resources, sometimes know what is happening behind the scenes of these companies. Take care and have a great day.